Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the exit indicator, specifically the Chandelier Exit and the Donchian Channel strategy. These tools can assist you in determining when to close your trade effectively. So by the end of this video, you would understand how to implement these indicators to your trading approach, potentially improving your risk management and trade outcomes. We start by understanding what the Chandelier Exit and the Donchian channels are. The Chandelier Exit is a trailing stop loss indicator which is designed to adapt to the market volatility. It uses the average true range to calculate the dynamic levels that adjust price movement. So this is the indicator as you can see it on my screen. For a long trade, the stop loss is placed below the highest high of a set period, placed at the highest high of a set period, while for short trades it is placed above the lowest low. It is placed above the lowest low in a short period. Now this ensures that the stop loss moves with trend, helping you stay in the trade as long as the trend continues. Now the Donchian channel, on the other hand, now this channel identifies the market trend and volatility by plotting three bands: the upper band, the lower band, and the middle band. The upper band represents the highest high over a specific period, while the lower bands represents the lowest low during the specific period too. The middle band is an average of these two bands. This channel highlights potential breakout points and help you to visualize support and resistance level. Both indicators are rooted in market volatility but serves different purposes. The Chandelier's exit focuses on trailing stop loss to manage risks dynamically, while the Chandelier channels emphasizing on identifying breakouts and trend direction through price extreme. Understanding how they work is effective for applying them efficiently in your trading strategy. Now, how do we combine both the Chandelier exit and the Donchian channel to trade? And they can be combined by creating a structured approach for managing both long and short trade effectively. For long trade, the Chandelier exit acts as a trailing stop, while the Donchian channel identify breakout opportunity. All this happens automatically. We start by setting the Chandelier's exit below the highest high of a defined period using the ATI multiplier. This will ensure that your stop loss adjusts dynamically as the price moves higher. Now, simultaneously, you wait for price action to break above the upper band of the Donchian channel to confirm bullish momentum. So once price breaks above the upper band of the Donchian channel, it signals your bullish trend. So let's look for a good example from this area. You can see that price broke through the upside following the upper band of the Donchian channel. which identifies or signals a bullish trend. Now for short trades, the reverse is the logic. The Chandelier's exit is placed above the lowest low of the defined period. The exit is placed at the lowest low of the period for a short trade. It is automatically placed at the lowest low. You have to look for price breaking below the lowest band of the Donchian Channel, signaling a bearish period. So when you notice price is breaking through the lower band, this signals bearish momentum. These combinations allows you to capture trends while maintaining disciplined risk management. At this area, we can see when it's following the lower band, signaling a downtrend, coupled with the fact that we are using the Chandelier's exit automatically that sets a trailing stop loss on our trade. The key is to let both indicators complement itself. Remember, the combination allows you to capture trends while maintaining a disciplined risk management because it will automatically set this for you on your chart. Now, the Chandelier's exit protects your position by trailing stop levels dynamically, while the Donchian channels confirms breakout directions. So this dual layer approach provides clarity in identifying trends and managing your exit efficiently. Now let's see a good example to spot the direction in the market. And as you can see in this area, when price was trading at the higher band, signaling it wants to break out of the higher band, this would have been a good opportunity to capture this move to the upside, while our Chandelier's exit would automatically trail our stop below this our uptrend move. The same with the downtrend move. When we notice price is trading at the lower band area of the Donchian channel, we have to wait for price to trade at the lower band, signaling a breakout. We'll enter our position at that area. You can enter during a retest of the middle line or when it retests the upper band, and automatically the Chandelier's exit will trail our stop in the direction of our existing trade. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you would never miss out on more trading tips and strategies. Thanks for watching, and I will see you in the next video.